Welcome to Clatch Radio. This audio and video were created for academic, entertainment, and comedic intent only. Nothing presented should be construed as investment advice or a recommendation to buy or sell any security. Welcome to Clatch News, concise by design, allergic to excess.
Today we're digging into the landlord of the S&P 500, S&P Global Inc., ticker is SPGI.
Right, the high priest of capital markets. And usually this is, one of the most boring, most reliable stocks you could own. But lately, it looks more like a crime scene.
It really does. The stock has plunged nearly 16%, down to multi-year lows.
And I know there was a softer outlook for 2026, but that doesn't seem to explain the sheer size of this drop.
No, the real story here, the narrative, is what people are calling the software apocalypse.
Okay, so this is the whole AI thing. The idea that new models, I'm thinking Anthropic's Claude or, OpenAI.
Yeah.
They're getting so good at financial analysis that nobody's going to need to pay S&P for their data anymore.
That's it in a nutshell. The market thinks AI is going to eat their lunch.
It's an existential threat, basically.
Exactly. If an AI can just crunch all the numbers for free, why would you pay the gatekeeper? But this is where I think we need to pump the brakes a bit and actually look at the business itself.
Because the panic selling feels a little unhinged from the actual financials.
Right. I mean, we aren't talking about some fragile startup here.
Yeah.
If you look at this through a Buffett lens, this is still a wonderful business.
I was just looking at the margins. Gross margins are sitting at 61.5%. Operating margins are 41.5%. That's incredible.
It's elite.
Yeah.
And you don't get those kinds of numbers just by selling raw data. You
Yeah.
get them by selling trust. It's what we call the social transmission layer.
Okay, break that down for me. What does that mean?
It means S&P provides the law for the markets. So sure, an AI can calculate a bond's yield, no problem. But an AI cannot certify the bond's creditworthiness to a pension fund. You need a liable, human-backed company to say this is AAA rated. S&P sells the rubber stamp, not just the ink.
That's a huge distinction. The AI does the math, but it doesn't provide the regulatory cover. It kind of reminds me of that resurrection rule you talk about.
No system dies. It mutates. And that's what S&P is doing. It isn't vanishing. It's mutating to integrate these new AI tools into its own workflow.
That makes perfect sense strategically, but we can't just ignore the chart. I mean, the technicals are ugly. It's crashed through the 20, the 50, and the 200-day simple moving averages.
Oh, it's completely broken. It has fallen off a cliff. But look at the RSI.
The relative strength index.
Yeah, it's sitting at 15.36.
Okay, and for anyone who doesn't stare at charts all day, anything under 30 is considered oversold. A 15 is just the market screaming in panic.
It is. It indicates extreme bearish momentum, absolutely. Yeah. But it also signals what might be a classic narrative fallacy.
The story is overwhelming the facts.
The market has decided AI invalidates S&P's moat, and the price is reacting to that scary story, not the reality of their cash flow.
It feels like the market is just punishing the old guard because the new tech is so shiny and new. It brings to mind that cultural reference about power dynamics.
Right. As Will Durant might put it when reframing how market winners stay dominant. Inequality is a biological outcome intensified by freedom.
That's a heavy one. But in this context,
it suggests that in a truly free market, the established winners, the standard setters like S&P, they tend to consolidate power precisely because they own the benchmarks. They define the game itself.
So even if the tools change, from spreadsheets to AI, the actual structure of influence stays in place.
That's the argument.
Okay, so let's strip away the emotion. We have elite margins, a sell-off that looks like pure panic, and an RSI in the basement. What's the market take here?
The current analyst's view, to summarize it, is a BUI. It's a contrarian play, the value play.
So you're buying the fear.
You're buying the fear. The reasoning is that while the tools are always changing, from the abacus to Excel to AI, the core human incentives do not. The global economy still needs a trusted central authority to validate value.
That's the lens, not prediction perspective. This has been Clatch News, efficient, skeptical, and done on purpose.
And maybe here's one final thought for you to chew on. If AI really does make financial analysis free and instant for everyone, does the value of the data actually go down? Or does the value of the brand that verifies the truth become the single most expensive asset on earth?
Thank you for listening to Clatch Radio.